Hello and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Srikanth coming to you live from India's startup capital, Bengaluru. And the top headline today on Startup Central is an international story where SoftBank and Uber have finally entered into an agreement for investment. Remember, this has been doing the rounds for the last few months. It's been going back and forth. There's been a lot of haggling, bargaining, disagreement within Uber's investors. But Uber has finally come out in a statement today and said that they have entered into an agreement for a potential investment by SoftBank. Now, in terms of the details, we'll just have some of those lines flashing on your screens. They haven't yet disclosed the price at which this is going to happen, the exact quantum. Those details we will come to know in the coming weeks when the tender offer kicks off on November 28th. But why should we care about this right here in India? For two important reasons. Remember, India is possibly the biggest bet for Uber outside of the US. They've already conceded China to the local competitor there, Didi Juxing. So India is a big market for them. Will we see more investment coming here? More importantly, what does this mean for its biggest India rival, Ola, which is also funded by SoftBank? So SoftBank, in a sense, hedging its bets here, betting on the two biggest players in the online cab aggregation space. But for more details and analysis on this, we're joined by a special guest on the show, Rehan Yar Khan of Orias Venture Partners, also one of the first investors in Ola. Rehan, thank you for joining us from Mumbai on the phone line. On the face of it, what does this really mean? You know, having a common big investor with your rival, the same SoftBank board member, is going to preside over an Ola board meeting, an Uber board meeting. Why aren't people talking more about this conflict of interest?
Well, I certainly think it's an interesting situation, and I don't think we've seen anything like this in the Indian ecosystem previously. But you know, I'll go by what SoftBank said. You know, they seem to say that they want to make peace between Uber and Ola. Not sure what that means, but I think, you know, if they were common investor, I think they'd want the two companies to end their price war or, you know, some such thing. So yeah, it's definitely a very interesting development, Chandra. I don't know what exactly to make of it, but I think positive things will come out of it.
Right. Rehan, you know, you use the word interesting. I mean, interesting can mean so many things, positive and negative. But just want to understand, is this the classic SoftBank strategy where they basically bet on, you know, multiple horses, a hedging strategy? Because we've seen this play out in e-commerce as well. I mean, they've invested in Snapdeal, Paytm, now Flipkart, and now, you know, they're going to invest in Uber and Ola. So is this a classic SoftBank strategy, so to speak?
Yeah, I think Chandra, from the outside of it, you know, I'm not a part of SoftBank, but from the outside of it, it looks like SoftBank's simple strategy is to bet on market leaders in every country, right? So they're picking up market leaders. I mean, once they like ride sharing, they're picking up all the market leaders in all the market. That's why they put in money in Uber and they haven't put money in Lyft. You know, similarly in e-commerce, they seem to be in all the e-commerce players around the world. Right? They have a few other themes that they like, and you know, you see them again in multiple of these companies in different countries. So just because they have Ola in India, it doesn't mean that they shouldn't be in Uber. And for them, it just so happens that some of these companies tend to overlap in markets. So I think they have a kind of a very simple, straightforward strategy, and that's why we are seeing this thing play out the way it is.
Right. Rehan, stay on the line with us. We're joined by two more people to really discuss what this means. Satish Meena from Forrester as well as Dhananjay from Redseer Consulting. Thank you for joining us on Startup Central. You just heard out one of Ola's early investors, Rehan Yar Khan, on what this dynamic means. But Satish, coming to you, what does this really mean as far as competition is concerned, as far as investment is concerned going forward?
So, you know, this is more about SoftBank's strategy to invest in, you know, Uber, and it is very much, you know, very related to do with Ola. So they want to be part of Uber, and they're working it out for a long period of time. They don't want to miss the current opportunity of Uber and also the future which is there, because it's if you consider all the cab hailing companies, Uber is superior in terms of technology as of now and also in future also. They wanted to part of this company. That's why the investment is the kind of money SoftBank has as of now is something they want to invest. And e-commerce is one sector in which they are heavily invested. Cab hailing or transport is something they are they have invested across countries, but Uber is the biggest opportunity which they have. So that's why the investment is. And I think in terms of synergies between these two companies, over a period of time, we will see these companies at some point of time working together, because it's not something that SoftBank will want these two companies to bleed, in terms of cash burn. So that's something which we can see, but how soon it can be, it's difficult to judge.
Right. Hold your thoughts there, Satish. Let me also go to Dhananjay from Redseer. Dhananjay, you've been studying these two players from a market share perspective, and they're perhaps a few percentage points apart. But what will this mean in terms of market share going forward? Is it good news for consumers net? Because both of them obviously have the ammunition needed now to win in India.
The investment news that has been made, the huge investment that is going to be in Uber, is definitely spike up a price war in India. A lot of funding might be transferred into the Indian market, because India is again a very crucial market. So yes, it can be a good scenario for the Indian consumers, because as and when funding or a huge amount of cash is pumped into any ecosystem, a part of it is actually transferred to the consumers. And also, a lot part of this funding is going to be used to improve the technology that these two players have been using. So yes, again, that is help to improve the consumer experience as well.
Right. Rehan, coming back to you, Satish made an interesting point about, we will know how they will work going forward, but they will work at some point, because SoftBank wouldn't want two bleeding businesses. Now, in terms of the synergies, do you see a China kind of scenario playing out where Ola perhaps absorbs Uber India, or will it happen the other way around? I mean, I'm just trying to figure out how they are going to work together going forward, because Ola is already part of a global alliance against Uber.
Chandra, just one small correction to what the previous gentleman said. I think almost the entire deal is a secondary, right, as has been reported in the media, of SoftBank putting in money into it. So the money is not going into Uber. The money is actually going to the shareholders of Uber. I think a very small part of that money is going to Uber, right? So I think this increased liquidity that Uber will use to sort of cut prices in India, I think that seems to be a unreasonable fear. In fact, going by what Dara, the new CEO of Uber, has been saying, is that he's driving the company towards profitability in order to IPO the company in 2 years. So I don't think there's going to be any kind of increased price war, in India and in other markets by Uber. I think they're past that, right? Coming to your question, what is going to happen? I mean, who knows, right? What is going to happen? There are 2 points of view here. One point of view here is, if the two companies combine, if Uber and Ola combine, it'll be a good thing for the company, and price war will certainly go away. More value could be created. But a contrary point of view to that is also that you need multiple players to actually build a market, right? And you have to remember that the Indian ride-hailing market is actually very nascent. It is estimated that actually only 1% of that market is so far developed. And you have regulatory challenges, and you have, all kinds of other things. So maybe it is in the best interest of the industry that there are 2-3 players that actually help build this industry versus consolidating into a single industry. And also, from what I understand, DiDi's experience with the merger hasn't been all roses. Right, we are hearing now of competitors which are coming up to take on this single entity in China. So that's a contrary point of view, that goes against a merger.
Right. Rehan, I know you mentioned secondary, but there is talk that apart from the secondary, there will be a fresh investment into Uber. But of course, we do not know the details of that because the tender offer kicks off on November 28th. But I'm going to get a final answer from Satish Meena. Rehan saying that there has to be space for multiple players, and India doesn't seem to be a winner-takes-all market so far, though that's the way it's played out in other mature markets when it comes to the internet companies. Do you see space for two players here, Satish, in the way it's played out in e-commerce, in hyperlocal, other segments, even in the cab aggregation space? Would it be fair to assume that there is room for two players? And let's not forget the established names like a Mahindra Group or a Tata, which at some point might eye this business as well.
Yes. So, as Rehan said, the market is very nascent at this stage, 1% retailing and just 2% or 2.5% of retail is online. So we are at a very early stage in terms of, seeing that kind of consolidation or seeing one player ruling the market. So it's very early to say. We might see entry of new players in the market, also these companies working it out for a long period of time independently. So the market is not mature as compared to the Chinese or the US market in all these sectors. So it's very early for one player to rule the market. It's good to have more than one player so that you can grow the market, end up bringing more customers to use these services. So that's good for a market point of view, but it all depends on how SoftBank wants to spend that money. So once they have the control of both, significant say in both these companies, they might want to reduce the cash burn, and that can change things. But it's very early to say, if there are space for only one player or two players. As of now, it's very small market.
Right. On that note, thank you so much, Rehan, Satish, as well as Dhananjay from Redseer for joining us on the show to give us a perspective of what this deal means. Of course, the fine print is not out yet, so in a few weeks we will know about how the secondary share sale took place, if there is going to be a separate investment that comes into Uber as well. But remember, it's still early days yet. But stay tuned to Startup Central, because on the other side, we tell you why you should know more about Alibaba's 11/11 sales, the records it's been breaking. We also bring you highlights from the IoT Next Awards that happened in Bangalore last week. Welcome back to ED Now Startup Central, and as promised, we get you all the numbers you need to know about from Alibaba's 11/11 Singles Day sale. Now, this is an event that they have championed for the last few years, and it's a day that everyone looks forward to really understand the scale and scope of Chinese e-commerce. And Alibaba did not disappoint this time with some mind-boggling numbers. But it wasn't just Alibaba. JD.com also posted very impressive figures at the end of that 11/11 sale. My colleague Rahul Dama joins me with more details as far as Alibaba's sale is concerned. Rahul, $25 billion in one day. That's what we are talking about. 11/11 sale for Alibaba.
Unbelievable, Chandra, as you really mentioned, every passing year, the 11/11 sale or the Singles Day sale, so to say, only gets bigger. So imagine and picture this. It was last year at about 17.8, about $18 billion. And now for it to have crossed the $25 billion mark is quite something. It really talks about the consumption pattern there in China. Also remember, this is the biggest online sale really as far as China is concerned. But to give you some perspective, all of it's also the first time that Alibaba has collaborated with the offline world. They struck partnerships with over 200 malls to really ensure there's a seamless flow of online to offline. The other big numbers to really give you the scope of how big the event is, about 3,25,000 orders were processed per second. So that's 3.25 lakh orders per second. Alipay, which is really the payment gateway for Alibaba, they processed about 1.4 billion transactions. So you're seeing the numbers really grow for Alibaba. Also, what has really driven this number of 25 billion is the large international push, because you had about 225 countries that have also taken part in the sale. And as you rightly mentioned, for JD.com also, they've clocked in closer to $19 billion in the sale. So it only gets bigger each passing day. To really draw a comparison, because India and China are really compared, the entire festive month that we saw, September and October, the Diwali festive month, generated sales of about $3.2 billion. 3.2 in a month versus $25 billion by a single player in China clearly talks about the huge scale and scope that the Indian market really is for the homegrown e-tailer Flipkart and Amazon and Alibaba now that has entered the fray, the potential that India has.
Right. Thanks for that, Rahul. In fact, there was a very interesting data set I saw where 25.3 billion is what Alibaba generated on a single day. Now, the total size of India's e-commerce market for FY17 is 33 billion. I know it's an unfair comparison because both countries are not the same in terms of GDP per capita. China is also a closed market compared to India. But, this gives you a sense of the upside potential there is for commerce going forward. So that's a number to digest. That's something to think about. But moving away from that to our final segment on the show today, where we bring you the highlights from the IoT Next Awards, a joint initiative by TiE Bengaluru as well as the IESA to really encourage startups doing all kinds of interesting things as far as Internet of Things is concerned, from Safe Nation to security to AI to robotics. I caught up with some of the winners of the awards at IoT Next. Here's a slice of my conversation with them.
We looked at IoT security, and we looked at security is about unexpected things, right? It's about hackers getting into your network, and all the security personnel are actually at it, but still the hackers got in, right? So what were the uncovered areas? And in IoT specifically, it's wireless, right? Wireless. A lot of your phones have Bluetooth today, and that's where we started because.
Should we be worried every time we turn on?
Well, we turn it off if you want to be safe, because as the awareness has increased, there's been more research, and it's an unexpected backdoor into the network, right? So even if you take all the OT, operational technology networks, lights, sensors and all, you can basically use the immaturity of these protocols to get to the gateway, crack through the gateway, even if there's a firewall rule, and get into the other part of the network.
Right.
This is Vishal, RE Connect Energy. We primarily deal with renewable energy space, and as we all know that the growth of renewable has been quite impressive over past 1 decade, not only in India but across the world. The challenge with renewable is the key sources of energy are wind and solar, and both are intermittent. And when you couple that with the fluctuating electric demand, it becomes very, very difficult for utilities to do load generation balancing, so that the grid security and reliability doesn't get compromised. What it calls for is basically predictive analytics, which can accurately forecast your wind power production, solar power production, also the electric demand, which is a function of political events and weather and various other
some predictive analysis so that you can.
So we provide forecast to utilities and the power producers on a day ahead and week ahead basis that how would be their production or net demand, and they can plan their generation or load balancing accordingly. So a lot of utilities are our clients. We are not a core IoT company. Predictive analytics is the main layer. IoT becomes basically a underlying layer which can help us get the data.
Yeah, I noticed that you make robots for various industries that use AI. I hope you're not planning to make some for the media to replace all of us.
Not sooner.
Not now, okay. You can put off those plans, you can focus on other industries.
Your basic belief is that whichever robots can come into any sector, that will restructure the whole sector.
Okay.
That will add value and increase efficiency. And in those lines, we are developing currently floor cleaning robots for large floor infrastructure.
Right.
And that can be used for malls, hotels, airports, and every commercial
So
space.
are these
like
already in operation, or it's a prototype?
Yeah, we have completed the pilots
Okay.
and in production currently.
Okay. In which city?
In
Where
Pune
can we
currently.
see?
In Pune
Where?
and
In
Mumbai.
Pune.
Yeah.
Okay. Okay.
And we are also developing robots for material handling, for carrying materials inside factories and warehouse in more efficient manner.
Okay.
And those are also different class of robots.
Maybe it will help achieve a Swachh Bharat, right, at some level?
Yeah, for the cleaning robots it will do. So the core technology is autonomous navigation. So we are leveraging different applications in different sectors.
Okay.
So we see that wherever the robotics is coming, it should restructure the whole sector and create some value with more efficient processes going on.
Sure. Yeah, Chetan.
Good evening, everyone. So
I'm sure everyone knows you in your previous avatar as, the founder of the Reva electric car company. So whoever has used a Reva, you owe it all to Chetan.
Well, it's lovely to have people who've been part of the journey. So India is looking at going all electric by 2030. And that's a huge aspiration for a country, but it's going to have a transformational impact on society. The challenge, having been doing this for 20 years, is that electric vehicles continue to cost very high because of battery costs. They have challenges around range anxiety. People want almost infinite range. And they have concerns around the long refueling time, which is 5 to 8 hours or maybe an hour of fast charging. So for us, we said, unless you fundamentally transform these three things, you're not going to have the kind of vision that India wants to go all electric. By separating batteries from the vehicles, we can today get electric vehicles, two-wheelers, three-wheelers, four-wheelers, and buses to be cost neutral. We can get the cost of energy per kilometer to be lower than gasoline equivalent, and we can create refueling time using battery swapping at half the time of gasoline.
We are from Aura Energy.
Yeah.
And so we actually started off with the premise that we also want to be part of this transition to 100% electric. And when we looked at the two-wheeler space, because almost 80% of Indian transportation sector is road transport is two-wheeler space.
So that was a slice of our conversation with the winners of IoT Next. We hope to bring you more conversations from that forum over the coming days. But thanks so much for watching Startup Central, and stay tuned to ET Now for news and updates.